Hello and welcome to Money Talks with me, Rav Sembi. And today I'm delighted to welcome Ed Shing from the Opportunity Idle Investor Fund. Welcome, Ed.
Thank you, Rav.
And today, Ed, you're going to be talking about the strength of the pound and how this might help investors. But first of all, just how strong is the pound at the moment?
Well, Rav, the pound actually has just recently hit a 7-year high, particularly against the euro. But if you look in trade-weighted terms, i.e. against a basket of the major currencies like the dollar, the Australian dollar, as well as the euro, a 7-year high. So pretty high.
And why is that so?
Why is it? Well, obviously the election victory from the Conservatives has removed some uncertainty. Remember that financial markets don't like uncertainty. What they do like is certainty, and that's what they've got with the Conservative majority. So I would say that's one factor helping the pound. Otherwise, you have actually a relatively strong economy. If you look at low inflation, strong employment, and wage growth starting to come back, all of these factors are making the UK economy look pretty healthy and make the pound look more attractive to overseas investors.
Yeah, and I suppose the key question is, how might this help investors?
For UK-based investors, there are a number of ways you could look at it. I would say you want to look at what is becoming cheaper to import into the UK. Because obviously, if you have a stronger pound, it means other currencies are weaker, which means you can buy stuff cheaper from abroad. The sector that I would focus on is maybe not the obvious one. It's actually food and drink. Because as a country, the UK imports 40% of all the food and drink that it consumes. So only 60% is produced here, 40% produced abroad. Think about it, we're talking about New Zealand lamb, we're talking about Australian wine, we're talking about fruit and vegetables from France, from Spain and Italy. So that is really where I'm focusing. And the sort of sector I would focus on would be therefore food retailing.
And which companies in particular are you looking at?
Well, obviously, when food retailing, you think instantly of the big supermarkets like the Tesco's and Sainsbury's. And they will benefit to some extent from cheaper food prices. But what I'm thinking about is more Marks and Spencer. Now, of course, you'll come back to me and say, well, Edmund, come on, they sell underwear, don't they? But did you know, Rav, and I'm sure you do, but maybe our viewers don't know, that fully 57% of Marks and Spencer's UK sales today actually come from selling food and drink, not from selling anything else.
Okay.
So they are a clear beneficiary, for instance, from the wine trade. Think about all the French wine, Australian wine, Spanish and Italian wine they sell. They're going to be able to buy that cheaper in pounds. If they sell it at the same price, they make more money.
But wasn't M&S a dog last year in terms of share price?
You're right. In fact, it's been a dog for several years. I mean, what it does provide, however, Rav, is a good dividend. But secondly, it has seen some quite significant restructuring and this repositioning towards the sort of Waitrose-like middle market for food, where it's been incredibly successful, and opening a lot of these simply food stores where they only sell food to actually boost their percentage of food sales. So they're clearly working to their strengths, whereas previously perhaps they weren't doing that.
No, sure. And what other kind of stocks, maybe smaller than M&S, ones to look out for?
Well, the other one I would really focus on, actually a little bit further down the capitalization scale, would be Majestic Wine. Now, obviously, they're a big wine, effectively a wine wholesaler, because they sell wine by the case. You can't buy less than 6 bottles at a Majestic. But again, they're pushing big volumes, Australian, Spanish, Italian and French wines. These will become cheaper to buy. They can sell them at the same price, in fact, at a cheaper price than, of course, the supermarkets do, because they're selling in bulk. And so they will benefit, again, from this uplift in profitability because of the euro and the euro pound and the Australian dollar pound exchange rates. On top of that, they've made an acquisition of Naked Wines, so they're boosting their presence in the online space, which I think is going to be vital for them to develop their business further going forwards.
Okay, so wine is where the money is then?
Well, we drink it, but we spend an awful lot of money on it, Rav, and I don't think that's going to change anytime soon.
Well, there you have it, straight from the horse's mouth. Thank you, Ed, and thank you for watching.